Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Demand for premium hatchbacks on the rise and waiting period on select model increasing every day. Car makers are finding ways to up the ante for small cars. The CNBC TV18 special analysis shows that car makers are doling out huge discounts on small cars to make up for the flat growth seen in April-June. That is the April to June quarter. Utkarsh Chaturvedi is here with more details. Utkarsh, take us through what discounts are on the offer and what can we expect going forward?
Well, India has been one of the most attractive market for low cost and affordable cars. But what cost is actually affordable? That dynamic is changing, and that is why you are seeing the entry-level cars full of discounts. In fact, what we are picking up is that cars which prices around 5 lakh rupees have discounts up to 80,000 rupees. Why is that? Because the sales volumes have been flat. Let's have a look at some of the entry-level cars and what kinds of discounts are the companies offering. Let's start with India's Pehli Sawari, which Maruti claims as Alto 800. The car's price is 2,51,000. The discounts are 55,000 rupees. Obviously, this is exchange bonus plus cash discount. The same is the story with Wagoner and Celerio. Both the cars are priced around 4 lakh rupees, but the discounts are of 65,000 and 60,000 rupees. Hyundai Eon, again, one of the cheapest car from Hyundai stable, has a discount of somewhere around 50,000 rupees. Grand i10 Quid, if you look at Grand i10, 80,000 discount on a car of 4,74,000. Why is that? Because the sales has been flat. If you look at the sales for Maruti in April to June this year, it has been almost flat. Hyundai, on the other hand, has declined in sales in the entry-level cars. Renault, even though Quid has not given a lot of discount, the sales have gone down, and that is why you're seeing these steep discounts coming in. And on the other hand, you have big waiting periods for mid-level cars like Baleno, Swift, even a Grand i10.
All right, Oscar, thanks for joining in with that. So that's almost, if you take the discount alone, it's a price cut of almost 20 to anywhere between 40%. Let's move on. And here's the latest in the GST space. Baba Ramdev-led Patanjali Ayurved, which is facing allegations of profiteering, is finalizing its response to the profiteering probe. Sources tell CNBC TV18 that the Haridwar headquartered company is likely to tell the authorities that it was already operating at minimum profits. Priya Sheth has exclusive details. Priya, what are you picking up? What exactly is Patanjali's stance going to be here?
What we do understand is that Baba Ramdev's Patanjali Ayurved is likely to respond to the Director General of Anti-Profiteering later this week. In fact, we had told you earlier that the authority had launched an investigation which was basically based on a complaint that Patanjali had profited from the sale of certain products post the rate cut in November 2017. In fact, what we do understand from our sources is that Patanjali is likely to say in its response that it hadn't raised prices in the months leading up to GST and therefore had been operating at a lower margin unlike several of its peers. But now with prices being significantly lower as compared with the rest of the industry and margins averaging out post the November rate cut, the company sees no room to cut prices further, is what we do understand. Of course, this is Patanjali's claim and this is what they will perhaps write to the government in their response, but they are open to showing the balance sheet and audit reports as well to the authorities. Of course, the DG Anti-Profiteering will go ahead and take about 3 to 6 months before they submit their final investigation report to the National Anti-Profiteering Authority. In fact, we did write to Patanjali on the same, and the company has confirmed that they have received a notice from the Anti-Profiteering Authority and will respond to it very soon.
Okay, fair enough, Priya. Thanks for joining in with that. So, Patanjali will be responding to the anti-profiteering authorities within this week itself. Moving on, the Airport Authority of India today won a 3,000 crore rupee arbitration case against 2 ground handling companies. The consortium had claimed that AAI deliberately breached ground handling rules since some airlines were outsourcing services to services for other players. The court dismissed the claim, saying that AAI does not give exclusive rights to provide ground handling services and there is no rule to limit the number of ground handling service providers. Road Transport Minister Nitin Gadkari has said that the scrappage policy for commercial vehicles older than 20 years will go through another round of consultation. That's according to the directions given by the Prime Minister's office. The scrappage policy was proposed by the Road Ministry to phase out commercial vehicles that are more than 20 years old. And here's an exclusive. We learned from sources that Shree Infra will likely call off the IPO of its equipment business. Investors believe that carving out a strong business will adversely impact Shree Infra's shareholders. Investors, in fact, feel that it should instead look at merging the two entities. The management has told CNBC TV18 that the IPO is neither postponed or called off. They insist that the deal value is accretive for shareholders.